Okay, good morning, my fellow capitalists and profit seekers. This is your growth stock guru, Rick Action Jackson. Thanks for joining us today. I'm going to share with you 3 stocks that I would buy today based on the discipline of my top quintile strategy. Top quintile strategy is trying to focus on the top 100 performers in the S&P 500. Those top 100 performers fairly consistently deliver 80% of the gains in the S&P 500. And we do venture outside of the S&P 500 from time to time for a really exceptional opportunity. And we've got one of those today. This is Bargain Hunting Thursday, July 9th. And let's get to it. Let's start off with what I think is one of the best companies in America, Microsoft. Let's go to the chart. Microsoft's had a tough year. Stock peaked out around $550 back in November, and then they're calling it the SaaS apocalypse, software as a service apocalypse. When Anthropic demonstrated for everybody back in October of 25 that you could verbally dictate to their new software platform what you wanted a new piece of software to accomplish, and it would just create the software and have it for you in a reasonably short amount of time. It freaked everybody out. And, people on Wall Street don't really understand software. We know the kind of profits software can make, but we don't really understand how you create it. And so when stocks are dropping and people are scared, it's just a lot easier to sell and then figure out later which stocks are going to survive AI and which ones aren't. Microsoft got caught up in this. The average software as a service company declined 72% in 5 months. Microsoft, I guess you could call a hero because it only went down 40%. But it hasn't really rebounded yet. And I can't give you any good reason for it other than other software stocks went down more. So maybe they're more of a bargain. Where I come out on all this is that, my 15-year-old nephew could probably design a Windows product that would replace Microsoft Windows. But what AI has also done is it's made every wise ass a computer hacker. And the number one concern in corporations today is internet security. And these software programs that you make are much easier to hack. And most hacking occurs on a piece of software in the first 30 days of its installation. So, you could come up with your own software, but it's not been tested for hacking like the big established companies have. Cost you a lot of man hours to develop it, and then you got to take care of all the security leaks. You're not depending on somebody else. And I think what we're all realizing is that if you embrace AI, you add AI applications to your platform, and your platform has strong security, you're going to be fine. If anything, AI is going to enhance your business, not hurt it. And I think Microsoft, above almost any other I can think of, is going to benefit from AI, not get hurt by it. So let's go over why we love Microsoft. Well, first off, you're getting one of the top 3 video game companies, and you're getting Windows. Both are machines, both generate 10-15% a year annual growth, and both are huge markets with huge customer lists. The other 2 reasons to believe in the future of Microsoft is that they're the number 2 cloud computing provider, and it's really easy to open up a cloud computer account if you already have Windows. And they are the number 3 company generating revenues and profits from AI with their Copilot. If any of you have tried Microsoft Copilot, it basically will let you go nuts for about 30 to 45 minutes. And then at that point, they're going to say to you, I'm sorry, I can't do that right now, or please subscribe. You've maxed out the number of Copilot requests for the week or the month. It's becoming more and more common that when corporations renew their Windows contract, and Microsoft has less than 1% churn on Windows. If you like Word, if you like spreadsheets, if you like Outlook, you're not going anywhere. You're going to keep renewing that Microsoft membership every year. They're adding on Copilot for somewhere between $20 to $30 a month. And that will probably go up in time, or you're going to get an allocation of how many AI requests you can make. In fact, Microsoft announced that starting in the fall, they're not going to be billing Copilot by the seat. They're going to be billing Copilot by the volume. Their earnings growth is impeccable. This company has been growing its earnings 5 to 25% a year for 30 years. I've never seen them miss an earnings report. They almost always beat the earnings report, and the reason is that, in my opinion, they know what the number is way ahead of time. They don't book revenue when they load their software onto a laptop or a computer or a Surface device or a phone. They count the revenue when you go home, pull the device out of the box, and register your software with the company. That's when they book the revenue. But they know how many devices were shipped weeks, if not months ahead of time. So they almost never miss an earnings report. They start off every conference call the same way. They'll spend 2 to 3 minutes congratulating all the Microsoft employees for working hard, and the results came in above expectations. They almost beat the number every quarter. And then they'll give you 10 reasons why this quarter is going to be challenging. It's not going to be so easy to beat the numbers again. And yet they do. They are the poster child for my top quintile strategy. The only question about Microsoft is it too expensive? Sometimes the stock gets really expensive. It's dirt cheap here. It's never been cheaper. It's selling at a multiple that's lower than the S&P 500. The S&P 500 right now is about a 20 multiple. On 2027 earnings, Microsoft's selling at an 18. It normally sells at a 50 PE trailing and a 35 PE forward. Current forward is 18. My target on Microsoft is $925, and it's not hard to get there. I don't need a record multiple. I don't need their earnings growth to be records. I just need their multiple to go back to a normal level, and I need them to keep growing their earnings over 15%. They've grown their earnings over 20% for the last 3 quarters, and their growth rate is rising because AI is giving them a new revenue source and a faster growth. So when you look at the 1-year chart here, you see that double tested its bottom a couple weeks ago. It's still not above the 90-day moving average, and for most companies, I would wait till that happens. But Microsoft's not going out of business. They got an incredible balance sheet, $90 billion in cash, no debt. They generate $100 billion a year in free cash flow. Wall Street's a little nervous that they invest $100 billion a year in cloud infrastructure. You watch. Satya Nadella, the CEO of Microsoft, I think is one of the best CEOs in America, if not the best. There's not one dime he's investing in this infrastructure that he hasn't already figured out how he's going to make that dime back in less than 3 years. All this infrastructure investment they're doing, and they've doubled their cloud and AI investments every year for 3 years. They started off with $20 billion 3 years ago, went to 50, now they're at 100. I expect their revenue growth to continue to accelerate. And when Wall Street realizes that AI is Microsoft's friend, not its foe, this stock's going to come roaring back. I don't know how long it's going to be here below $400, but if you can get some at under $400 and you can hold on to it for more than 2 years, you will thank me. Now, that wasn't financial advice. I'm saying I really like Microsoft. It checks all the boxes on my strategy. The only one it doesn't is its chart, but you don't want to catch a falling knife. This is no longer a falling knife. It's demonstrated twice, and when it gets down to 350, the stock will bounce. So anywhere between 350 and 400, if you can give it 2 years, you should make very good money. But this is for education purposes. We are not giving specific advice to anybody. I'm just sharing with you on whether a stock would be a buy or sell under my discipline on how I pick stocks for education purposes. Do not act on this without consulting a financial advisor, and you can lose money in the market. No crying if you do. I didn't tell you to buy this. I said if it's appropriate to buy Microsoft, right here I like it. Check with your financial advisor, especially if you're a new investor. Okay, so the next one we're going to talk about today is another bargain on a pullback. Bloom Energy, ticker BE. Bloom Energy, let's look at the chart, is a fascinating company. If you were smart enough, and I was not, to buy it back in August of last year, stock's gone from 25 to 250. It peaked out at 340 2 months ago. I think this pullback's a gift. What does Bloom Energy do? Bloom Energy manufactures electricity, but while they use hydrogen or natural gas to do it, they don't burn it. They chemically react it with they strip from the hydrogen and natural gas hydrogen atoms, and combining it with oxygen, they generate water and energy. And it's at a competitive price. They can do it pretty much for close to the same cost of what a natural gas plant can do. And these natural gas plants take 2 years to build, and there's a 3-year backlog. Bloom just opened up its third factory. They're doing about $2 billion in revenue, $3 billion in revenue, but they've got a $7 billion backlog. And there are a lot of companies out there that will order from them if Bloom can promise they can deliver and have the power up and running in less than 12 months. With this new production facility they have, they should be able to handle at least $7, if not $10 billion in revenue. This company is doubling its revenue almost every year. And if you believe that these AI data centers are going to continue to get built, there's no way the traditional power grid keeps up. They have to find a new place to get power. Bloom Energy is the answer. Okay, so let's look at the chart on Bloom. I don't want to chase this. There's a lot of people who have made a lot of money in this stock in a short period of time. But as you see with these hypergrowth names, usually about once every 3 to 6 months, you get the chance to buy it below the 90-day moving average, which is the red line. We've pulled back here again below the 90-day. Here's the 200-day. So just so you know, if they have some bad news or they miss a quarter, and they've beat every quarter for the last 3 years, this is where the stock probably falls to. So don't get involved in this stock if you don't have the stomach to hang in there if it fell down to 150 to 170. But I'm buying more of it down there unless there's something really wrong with the company. This company's long-term growth rate is extremely bright. Now, it's not a cheap stock. It's selling at 10 times revenue, but they deserve it. They're growing over 50% a year, and that growth rate will probably stay at 50% or higher for at least 2, if not 3 more years. So that means this company should go from $2 billion a year to $6 billion a year in revenue, and that would make the stock cheap if it was doing $6 billion a year now. So it's going to be a rocky ride, but hey, if you bought it last August and didn't look at this chart and just looked at it now a year later and you saw it went from 25 to 240, 250, would you be happy? I think it's going to go from 250. My target on this is 804, and that's my 4-year target. My 2-year target is 415. I would not chase it above 280, but 250 to 280, I think this is a very attractive buy if you believe the AI data center build out is still in the early innings. I think we might be overestimating the AI build out, but I do think it's still got a long way to go. And I do think the future of this energy is very promising. So that's Bloom, and there's no CO2. So the tree huggers are going to love this company because they don't generate any CO2 or any noxious toxic waste. Like I said, the combining of the hydrogen and the oxygen atom generates heat, which generates electricity, and it generates water. Water is the byproduct of the chemical reaction. So that's Bloom Energy, BE. I've wanted to buy this stock before, but it was always too expensive. Down here at 240, with their earnings expected to double in less than 3 years. I think it's a very attractive entry price. Our third name today is a controversial one. I've watched this stock for a long time, and I think now is the time to finally get in. Let's look at the 5-year chart. It's Super Microcomputer. It's currently trading just under 28. And I think if you can get into this under 28, it's a fantastic risk reward. Let's get all the dirty laundry out of the way. You see how this stock really spiked in 2004. What happened in 2004? Well, NVIDIA named Super Microcomputer as their vendor of choice to load their GPUs into their servers if you wanted to maximize speed. They have a proprietary motherboard. A motherboard connects all the different chips and accessories and wires in a computer, and they allow the computer to run super hot and super fast, and their servers are designed with a cool water cooling system going through it. For a lot of stuff we do on the internet and for a lot of AI needs, you don't need this much computing power. But if you do, nobody in the game can provide servers that will allow the computer to act faster or tolerate as much heat as Supermicro. So why did the stock get so beat up? This company has been run by a bunch of clowns, but they finally cleaned house. They have been accused of cooking the books and caused their auditor to resign. That was the dive in October of 2025. Ernst & Young resigned as their accountants because they were booking revenue before they were billing the customer. And a weak Achilles heel this company has is that they don't require a significant deposit up front for an order. The new CEO said he's studying that, and they probably will change the policy. But it takes months to set up these server racks with plumbing and power. And they got to stock all this equipment, set it up, and don't get paid a dime until it's up and running. And their orders are growing at 200-300% increases year over year. They've run out of cash twice. They just did a $7 billion offering, so they now have $6 billion in cash, and they're all caught up on their bills. And the other two reasons why there's been a number of executives fired here is that they've been caught twice shipping NVIDIA chips to China that were not allowed to ship to China. But they've got a new head of sales, they got a new CFO, they got a new CEO. What matters here is that they have the best box on the planet, and they've got a 4-year backlog. And with this new injection of $7 billion in cash, they're going to be able to double their production. This company's probably going to grow from $2 billion a year in revenues to $6 billion in 18 months. And it's selling dirt cheap. So they got rid of all the people that caused the problems with accounting and with smuggling product to China. They have a backlog that has tripled in the last 6 months. And the stock is down 80%. This is almost a dream turnaround situation. And the last 2 quarters, they beat expectations, and they've beaten the expectations 10 of the last 14 quarters. I might be a little premature here. This stock might not have bottomed, but if it goes lower, I want to buy more because I'm very confident that this stock could be at least $50, if not $80 in less than 2 years. And we're selling today under 30. So that's Super Microcomputer. When you look up stuff in the past, you're going to see analysts saying, stay away from this. Management's a bunch of crooks. All the bad people have been fired and replaced. And yet their backlog is 10 times bigger today than when the accounting scandal broke. Now, if you're one of the biggest players in AI and you are building some of the biggest data centers on the planet, why would you order equipment from a company that has nothing but bad press? Isn't it obvious it's the best product on the market? And they have new management, and this new management is going to be white glove on everything, full disclosure on the financials. No more trying to sneak stuff to China for being bribed with boxes of cash. This company's growing 50 to 100% a year. It doesn't need any of that nonsense to show investors this is a great business. And now that they've got $6 billion in cash, they can pay their bills and they can grow. So I think it's a great time to buy it. And I think they'll continue to grow very fast and grow faster than Wall Street's predicting. Wall Street's forecasts are conservative, and yet their numbers come in great. It must be a great product, or else why would anybody be buying it? Because you've got all the reasons in the world to not do business with these guys, but you can't find the product anywhere else. So buy this jewel that's stuck in the garbage, and when all this stuff about accounting and illegally selling to China is 12 to 24 months old, Wall Street's got a short memory. They won't even remember it. They're just going to look at how great the numbers are, and they're going to see a stock that's dirt cheap growing super fast. Those are my 3 picks for today. Thanks for checking in. If you have names you want me to comment on, just use the phone number for a text or the email below to share it with me. See you tomorrow.